Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Ethereum, a non-emergency video. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. We also do have the premium list if you want access to the weekly reports and videos, Telegram alerts channel, the trading view indicators, and more. Make sure you guys check it out in the description below. Let's go ahead and jump in. So recently, with the move back to the downside, it has a lot of people scratching their heads as to what is going on in the market. But in fact, these types of moves are to be expected, of course. Okay. Now, I think the main thing that people are worried about is, namely, is it a dead cat bounce, right? Is it a dead cat bounce? And you can certainly understand why people would think the way they do. I don't think it is. I mean, I personally think we are reestablishing what the new normal is, okay? And that new normal range, in my opinion, is essentially between, say, where the last bottom was at 1,700 all the way up to $4,000. Let's say 2 to 4K. It's the new normal. We're trying to get accustomed to what the new normal is. And we've seen these types of moves before, okay? And just the other day, we put out a video on Ethereum, and I told you guys, hey, I mean, it looks like we're just headed straight up. There's a good chance we could still just be going straight up. But if history is any indication, then after one of these major moves up, what do you normally need to see? Long accumulation, reaccumulation, if you will. When have we seen that before? Well, we didn't see it here, okay? Back in 2017, 2018, we sure as hell didn't see it. Not at the end of 2017, early 2018. We had a bounce, and that bounce, by the way, was still about 50% below what we had previously made it to. Okay, so the peak was at a very modest $1,400 or so, around $1,400. The bottom took us all the way down to $300 or $400. We had a dead cat bounce up to $800, and that was all she wrote for years. Okay, that was it. Today, I mean, if this is a dead cat bounce, the cat, I mean, it's must be made of rubber or something, because this is a pretty high bounce here for this to be for this to be considered a dead cat bounce. I mean, we're essentially just flirting with the prior all-time highs. Look at the weekly candles, in fact. Look at these. It's the same thing. It's the same thing. I don't think it's a dead cat bounce. Now, that doesn't mean we can't go down for a little while and continue just sort of grinding at some of the lower prices. I think that's always a possibility. But when I look at the chart, it doesn't scream dead cat bounce to me. If you're unfamiliar with what a dead cat bounce is, it's just what people call the inevitable bounce that follows a market cycle top for the asset, right? So this was a dead cat bounce in 2018, and then it was just downhill from there. Today, though, we see that Ethereum has made it back to around $4,000. So it seems still fairly healthy. And the fact that we're trading over $3,500, despite the fact that Bitcoin had such a quick and swift pullback, is actually pretty impressive. Okay, it is pretty impressive. Now, if we go look at prior times we saw this type of price action, it might make a little more sense. Because from what I can tell, my own ignorant viewpoint potentially, doesn't look like this at all. Doesn't look like that at all. What does it look more like? Well, maybe like this, right? Maybe it looks like that. We had a peak, a local top. We had another local top. What did the next local top do on the weekly time frame? Right? What did it do on the weekly time frame? Well, it came right back to where we had gone. All right. I mean, we went up to very modest, 350 in June, and then in late August, early September, we made it back to 350. We went back down to the 20-week though after that. So, the things that people need to be aware of, and the way I navigate the market, and is honestly one reason that I get flack in the cryptoverse for navigating it like this, but I contend it's the best way to navigate it. Always be prepared for the downside. Always be prepared for it. be conservative. If the price is 3,000 or 2,500 next week, I would look at it as an opportunity. If it's 4,500 or 5,000 next week, then be happy with the position that you have. So always navigate the cryptoverse, being prepared for either direction. Try to recognize where we are in the market cycle. I mean, if you think we're going to go back to $300, then certainly DCAing it at even $2,000 or something wouldn't make a whole lot of sense. But if you think there's more room for the upside, which I personally do, I do think there's more room for the upside. I'm not saying that upside has to come tomorrow, because again, I think the cycles are going to continue to lengthen and whatnot. I do think Ethereum can probably make it to around 10,000 plus or minus a few K, right? What's a few K among friends? I do think it can make it there. I don't know that it's going to make it there this year though. And the good news is that this year only has about a little less than 4 months to go. I mean, we got September, October, November, December, and then we're into 2022. So if we look at this range, there actually are a lot of similarities, okay? First local top in June, second one in late August, early September, and then back to the bull market support band until November, okay, until November. And, you know, if we were to go back to the bull market support band, which, by the way, at the current time, the 20-week SMA is currently trading at a very modest 27.88. And the 21-week EMA is at 27.22. What would take us to those levels? What is an event that could take Ethereum back to the upper $2,000 range? Well, an event would be if Bitcoin tests the 20-week moving average. Okay. Of course, this comes as not a shock to many of you guys, but if Bitcoin were to have a pullback, which it already had a wick down to those levels, but if it had a sustained pullback to the bull market support band, the 20-week SMA, the 21-week EMA, we'd be looking at another 10% drop. For Ethereum to go back to those levels, we would need to get about a 20% drop. Does that make sense? It does. Why? Because we understand that Ethereum has more downside risk than Bitcoin. But if it didn't, then I would expect higher returns for Ethereum. So if it had less downside risk and more upside potential, then I would have more Ethereum in my portfolio than Bitcoin. But because I actually believe that Bitcoin has less downside risk than Ethereum over the macro scale, I have more Bitcoin than Ethereum. If I have more Bitcoin than Ethereum, it means that I expect the downside risk to be on Bitcoin, I expect it to be less. But it means for Ethereum, I expect the upside potential to be more. Because if it's not more, again, why do you take on more risk for an asset that you think is going to give you a lower return than a less risky asset? You go with what gives you the best risk-adjusted returns. And it turns out that if the best risk-adjusted returns for Bitcoin and Ethereum, as measured from the Sharpe ratio, right, are about 65% Bitcoin, 35% Ethereum, but it is a function of time and it varies every single month, okay? It depends on the time frame you use. So I look at this and I say, you know what? If we break out here, send it, right? Send it. No problem with it. If we come back down, we test the bull market support band. What's wrong with that? I don't understand. I don't really understand what's wrong with that. I mean, everyone's getting worked up over a drop that took Ethereum to the valuations it was literally at 2 weeks ago. You know, I mean, this isn't anything to get out of bed for by any stretch of the imagination. Now, there is another time we can look at similarities between, say, this type of a move and another one, okay? And remember, this one over here went up, and then it came back down, and then back up, and then it was putting in basically the same highs, but it was putting in higher lows. And then on the third attempt, it was blast off, okay? So far, what we're looking at is, okay, we moved up, and then we came down. Even the times here are sort of getting spread out, and then back up. So I think something to look out for here would be if we come back down and we hold the bull market support band here like we did back over here in 2017, then maybe that's what we're looking for. Maybe the third attempt is what it'll take to ultimately break out to the upside. There's also another one we can compare to, and you should take everything into account, and it's this one over here. And it also looks relatively similar. albeit slightly different. Okay, the first local top happened in March. We came back in and actually put in a new all-time high in June. We actually came back up to the same level again in September, more or less. I mean, we're all around $14, $15 with an all-time high close to $21. Viewer discretion is advised if you're having to think about a $10 Ethereum right now or a $10 Ether. But here, in fact, we had 3 tops, right? We had 1, 2, 3. And then what happened? We actually had a drop below the bull market support band, and we had a wick lower than we had for, about a year almost a year, maybe like 9 months or so. A wick really down low. So again, we came up, went all the way up to a very modest $15, back down to about $7, back up to 21, back down to 7, back up to 14, and then all the way down to $6, and then we then blasted off from there. So what you'll recognize between this move here and then this move over here is that this one held the 20-week, this one didn't. Okay, this move did not hold the 20-week. But in both scenarios, we ultimately broke out to the upside eventually. The time frame was different. Okay, the time frame for this one from establishing this range was about half a year. The time frame for this one from establishing this new range was about a year. Right now, in the current range that we're in, we're looking at about half a year, not even half a year. Okay, so moral of the story, my thinking, I do think time is on our side. I do think we just need to keep hanging out, right? We just need to keep hanging out at these levels. Eventually, I do imagine we will break out. Now, the issue with causing us to, what would have to happen for us to go below the 20-week? Well, of course, if Bitcoin broke below it, right? I mean, if Bitcoin breaks below the 20-week, Ethereum's going to get wrecked below the 20-week, right? We know that. And in fact, Bitcoin over here, Ethereum dropped 50% below the 20-week. To give you an idea of what that would look like today, a 50% drop below the 20-week at the current time would take us all the way back down to $1,400, which would actually be the prior all-time high. So if we're talking about, worst case scenario, right? If we're talking about worst case scenario, I would say, yeah, I mean, it's possible that we go back below $2,000. But if you're gambling or something on the idea that has to happen, what happens if we don't and we just hold the 20-week and then we keep moving up? So I think you need to navigate the market accordingly. Keep all these things in mind. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Remember to check out the premium list. You can find that at intothecryptoverse.com. Thank you for tuning in. Subscribe. Let's go for 550,000 subscribers. Click the bell icon to turn on your notifications, and I will see you next time.